Now, I personally am no stranger to covered call style income focused ETFs and have been invested into several of them for several years now. Like take right here, for example, my 2,734 shares of QLD that I've owned for several years, along with my 1,200 shares of JEPI, or even things like my 500 plus shares of JEPQ. Now, I'm a huge fan of the covered call strategy and I utilize it throughout my portfolio, even on single holdings that I hold. And this is because covered call overlays not only reduce volatility in your portfolio, but also can potentially offer a lot more income a lot faster than just holding onto the asset alone. Now, just as of recently, I came across a newer covered call style income focused ETF that not only has offered a substantial amount of income, at least historically, but also offers a ton of upside on top of that. Now, like the title says, this could potentially be the best covered call style ETF I've ever came across, or any of us have came across. And this is for multiple different reasons that we're going to go through in today's video. So if you want to go through this newer covered call style ETF with me, make sure to drop a like down below, subscribe, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the new covered call style ETF that I just purchased as of recently and that I'm honestly sort of obsessed with right now is the Goldman Sachs S&P 500 Core Premium Income ETF, or ticker symbol GPIX or GPIX. Now, this ETF is still relatively small compared to some of the other ones like it, like JEPI or JEPQ, and it currently has only 200 million or so in assets under management. So this ETF could be finding a diamond in the rough, and this is before it gets very popular. Now, at this point, there's really only so many different ways these covered call style ETFs can sort of differentiate from the others. And this is because the covered call style, although complex, is more or less buying a basket of stocks or buying ETFs and then selling calls on them. But this ETF does it a little bit differently. The overview of GPIX is very simple, yet very close to exactly what I personally am looking for as far as my overall investment objective, which is seeks current income while maintaining prospects for capital appreciation. So GPIX is not necessarily going to be an income focused ETF that's only going to be focused on generating a ton of distributions, a ton of dividends, but really sacrificing upside also. Now, I personally don't have anything wrong with those style of ETFs, but for my long-term strategy, especially with where I'm at currently in my portfolio build out and my long-term investing career, I'm looking for different ETFs, different stocks that are going to offer income, of course, but also I still want a large portion of my portfolio to have the prospects for capital appreciation and upside, because although income is very important, I still want my net worth as a 32-year-old to keep growing over time along with my age. Now, it says then reasons to consider investing: seeks consistent monthly distributions. This is one of my favorite parts about this ETF. And again, this might not necessarily apply to what you're looking for, but I love this. It says aims to generate a consistent monthly distribution rate, generally from option premiums and equity dividends. Now, I'll show you here in a second, but at least so far since inception, the payouts have been looking very good. It also says core equity exposure with lower volatility, provides core equity exposure to the S&P 500 index, and dynamically sells call options, are allowing participation with rising markets and potential outperformance in negative or flat markets. Now, that's another one of the things I love about covered calls. Like, for example, in my portfolio, I currently own a ton of realty income, and a lot of people on YouTube are always ragging on me saying you own so much realty income and it's basically traded sideways over the last 5 years. And I politely explained to them that with selling covered calls, I've actually been earning anywhere from an extra 3 to 5 to 7% per year, even while the equity's been trading sideways. Now, also on top of that, who doesn't want more exposure in their portfolio to things like the S&P 500 index? At least I personally do. Now, lastly, it says diversifying source of income. Seeks to deliver attractive income with lower correlation to traditional income sources and their risks. So at least so far, GPIX, the Goldman Sachs S&P 500 Core Premium Income ETF, seems pretty solid. It seems like it does sort of a lot of what the other covered call style ETFs do, but maybe even better. And this is because of the dynamic covered call overlay, which is once again trying to seek upside during the times where the market's going to rip upwards, which at least over the past few years, that's happened quite a bit. Now, for a covered call style ETF, this ETF is performing amazingly. Now, I say that because a lot of these covered call style ETFs trade maybe more or less sideways or up a little bit, but on the max time frame, and this is just since October of 2023, this ETF is up around 20.64%, and this is not even including dividends. And keep in mind, this ETF does all this for just an expense ratio of 0.29%. Now, I can only speak for myself. I'm getting sort of used to the 1% or so expense ratios across these different covered call style ETFs, or even sort of these alternative style exchange traded funds out there, because if they are going to have a strategy that might be a little more complicated, I think we can all agree that we're willing to pay a pretty penny for. Now year to date, GPIX is up around 7.22%, so once again basically trading in line with the markets, especially when you add in those massive dividends and distributions that it's paid so far. Now here's the crazy thing, and this is one of my favorite parts about this ETF, at least for me personally. Like I said, maybe some of you guys don't care about this, but for me, I like to have an idea of what I'm going to be receiving on a monthly basis. And with GPIX, at least so far, has paid anywhere from around 30 cents to 34 cents, at least since inception, which again is relatively new, so take that with a grain of salt. But if I can assume that I'm going to earn around 30 cents or even 34 cents, somewhere in that realm every single month for every single share that I own, which costs as of right now around $47 per share, I can sort of more or less assume that I'm going to receive around a 7%, 8% yield ongoingly, which helps me sort of forecast out exactly my entire income plan for the year. But besides the point, with the amount of income that GPIX has been paying investors, at least so far, we're talking around an 8%, even 9% yield, at least historically, which again, this can change, but so far it looks pretty good. But honestly, what shocked me most of all when it comes to GPIX, and this is where this ETF really caught my attention, if you plug in GPIX and theoretically invest $10,000 into it, since the time of inception, 0.87 years, so again, it's relatively new, but still, a $10,000 investment over that time frame would have turned into almost $13,000, or an annualized gain of 33% or 29% total. Now, this was shocking to me simply because, again, a lot of these covered call style ETFs either pay around a 10 or 12% yield and or offer a little more upside potential, but GPIX is sort of that sweet spot that offers, say, around 7%, 8% yield, but also at least so far has offered some upside on top of that. Now, with any newer ETF that's only been trading for a series of a few months, I think it's going to take some time to see how this thing really holds up against different market turmoil. But at least so far, this ETF seems to be holding up just well. The strategy seems to be pretty bulletproof and seems to be able to sort of offer investors the best of both worlds as far as income and upside, which is why GPIX 100% is going to be a fixture in my portfolio moving forward. So now that we went over GPIX, the Goldman Sachs S&P 500 Core Premium Income ETF, I share with you guys some of my thoughts on it and why I'm really excited about this ETF and very optimistic about its future. I lastly, most importantly, want to hear from you guys down below. After we dug into this ETF together, what are some of the good things and maybe some of the bad things that you found about it? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.